Let's bring in Stacy Rasgon from Bernstein Research, also here to break down the Intel numbers with us. You had a chance to look through. What jumps out for you?
Briefly, yeah. So look, the quarter was very good, but we knew that was going to happen. We knew they were going to beat. The guide is interesting. It's in line on revenue. It's quite a bit below on EPS, so it suggests to me that costs are going up. In the quarter, data center margins were incredibly low, 23%. I've never seen them that low. And they're guiding, obviously, for the full year. I mean, they took it up a little bit. But given the magnitude of the beat in Q1, I suspect they're actually effectively guiding the second half down from where maybe people were before. And the gross margins in the second half are coming down by like 250 basis points. So these are all going to be issues to dig into on the call. What's actually going on first half to second half? What are the drivers? What's going on with the margins? And in particular, how permanent is that margin degradation going forward as we go into next year? As certainly as some of the other costs.
And also, Stacy, how important is that? I mean, how much is Intel right now a play on what's going on now and in the coming quarters, and how much of it is a longer-term vision here from the new CEO, including the foundry and the expansion of factories in the U.S.?
Yeah. I mean, that is obviously the story, right? I mean, the near term will set up to wherever they're going to go, but with that long-term story, we kind of have like the broad basis of the plan. As I think somebody alluded to earlier, though, even if they sort of succeed on what they're doing, they're still going to be behind on process. So it sort of brings some of that into question. And we still have no idea what the transition economics look like as we go from where we are today to where they might be in 2 years or 3 years. And like I said, if you start to peel in here, especially on the margins, which I think is a good indicator of where those transition economics are going to go, those look like they're going in the wrong direction. So we'll see. The other question here, obviously, is they're beating on PCs. Data center missed. I don't know how sustainable the current PC strength is. They're probably over-earning on that, too.
Key questions for you on the call?
Yeah, I mean, obviously, anything through the rest of the year, margin drivers, drivers of the revenue growth, sustainability of PCs versus data center. Do we get the data center recovery in the second half? And then, obviously, anything else they can tell us on the new plans, process technology, CapEx, foundry strategy. Anything we can get in terms of trying to start to piece together what the transition looks like, that'd be helpful.
So this is clearly not your favorite stock. What's your target?
We're $43.
Yeah. Intel trading $60.93 after hours, down 2.5%. Stacy, thank you for the quick take. Stacy Rasgon.
Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.